Car payment defaults hit 29-year high as borrowing costs surge. Inflation-squeezed Americans are defaulting on their auto loans at levels not seen in nearly 3 decades as record-high borrowing costs threaten to price many Americans out of the market. The percentage of subprime auto borrowers at least 60 days past due on their loans rose to 6.11% in September, up from a previous high of 5.93% in January, according to Bloomberg, citing Fitch Ratings data. September's delinquency rate is the highest seen since 1994, Fitch reported, which can be attributed to the Federal Reserve's decision to hike interest rates to their current 22-year high, between 5.25% and 5.5%. Well, one of the most alarming signs of a potential economic downturn is the rise in auto debt. As we speak, auto debt in the United States is at a 29-year high. Yes, you heard it right. A 29-year high. To make matters worse, Americans are also defaulting on their credit card loans, with delinquencies reaching 3.6% so far this year, according to credit agency Equifax, and looming student loan payments surely won't help the situation. In the last decade, auto debt has risen at an astonishing rate. From $1 trillion in 2009, it has ballooned to a staggering $1.3 trillion in 2023. That's an increase of nearly 30% in just 14 years. This may seem like a lot of numbers thrown at you, but what it really means is that more and more people are borrowing money to buy cars and are struggling to pay it back. This could lead to a wave of defaults, similar to what we saw with the housing market crash in 2008. Now you may ask, why is this happening? Well, there are a couple of reasons. One is that cars have become more expensive and people are borrowing more to afford them. Another reason is that lenders have been loosening their standards, giving loans to people who may not be able to afford them. This rise in auto debt is a worrying sign for the economy. If people start defaulting on their loans, it could lead to a chain reaction that could potentially push the economy into a recession. To summarize, the current state of auto debt is alarming. It's at a 29-year high and shows no signs of slowing down. The reasons for this are complex, but the end result is the same. More people are struggling to pay back their auto loans, and this could potentially lead to a recession. So, the next time you hear about the booming economy, remember to look beneath the surface. The rise in auto debt is a warning sign that all may not be as rosy as it seems. If history has taught us anything, it's that ignoring these warning signs can lead to disastrous consequences. In the end, it's crucial to understand the economic landscape and the potential pitfalls it may hold. The high auto debt burden is a ticking time bomb that could explode anytime, and it's our responsibility to be aware of it. So keep an eye on the economy, stay informed, and most importantly, stay safe financially. This is not just about cars and loans, it's about our future.